All right, hey everybody. What's going on this morning? We have somewhat of a correction in going on, I guess you might say. Anyway, let's jump into it, shall we? And what's up with my display here? That's not cool. That's not gonna work. If that's not gonna happen, well, let me. There we go. All right, should be seeing that. I think. I hope. There we go. Yeah. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. Gotta say that stuff. Earnings, not the overall overarching theme of the week, really. Jerome Powell came out yesterday, so super hawkish. We're raising rates and we might raise rates and we might go higher than what we said in September and blah, blah, blah. And the market said, ah. Anyway, the market doesn't go higher when everybody's optimistic. The market goes lower. And that's kind of what we saw yesterday. Everyone was getting real optimistic. We were going to see a turn in the market and things were going to get better and we're going to go higher and Jerome Powell's going to flinch and blah, blah, blah. And then he didn't and everybody got bearish and we dropped. So this gets it where we can actually go higher. Doesn't make sense, right? Yeah. It's I posted a quote into Discord earlier. Let's see if I can pop that up really quickly if I can find it here. It's probably going to be on the other screen. Nope. Where did you go? Where did you go? That's a good question. Where did it go? That wasn't it. Forget it. Anyway, it was, I can read it on my phone. So the quote goes something like this. Pop into the right one. The purpose of technical analysis, which is what I do here, is to identify trend changes that precede the fundamental trend and don't yet make sense if compared to the concurrent fundamental analysis. So the fundamental stuff is all the crap the news says, all the fundamental stuff, all the news stories, all the fundamentals of stocks. Your price to earnings, your price to sales, all those things, how the company performing. Well, those are all lagging indicators. And sentiment really drives the market, and it's subconscious sentiment. Now, when we're all subconsciously bearish, the market tends to turn bullish. When everybody's like, all the news, everything's bearish, the market turns. That's what we saw right back here. It's like, why did this flip do a 300-point move that one day? Just a couple weeks ago, right? Why did it do that? Why did we go on this bullish run? Well, everybody was pretty epically bearish after that CPI print, and it kicked off a bull run. Now, everybody was getting kind of optimistic we were going to break out higher, and then we kind of crushed back down. And we're doing a 50% retrace. We just touched it here just a little bit ago. 618 coming in just a little bit lower. Let's zoom this up so we can see it. And about 36.64. My numbers aren't snapped on because I hate that snap tool in TradingView. But roughly 36.60 is our 618 level. That should hold if we're going to maintain a bullish bias here in the market. So this guy should hold right in this zone. Now, if we hold the 50%, that's quite bullish too. Now, this could be, and the downside here, the caveat is that this could be part of a bigger correction where we get this echo type move where we go, this was the A wave, this was a B wave retrace somewhere in here, and then we go, let's pretend like that dip there today was the low. We could pop right on up here roughly 4150. That number sounds familiar. I've been talking about 4150 being kind of a potential top. Well, if we go right up there and turn down again, that could just be a big three-wave corrective move, and we extend down for a lower low. So this is, we're still in a precarious position in the market right now. Stopping right there around 4150 can be very dangerous. Now, if it extends down a little bit, this level does pull down to about 4100. So there's about 50 points of difference here between these fibs. So just be careful, be cautious, know your parameters, know what we're looking for. All right. Want everybody to be aware. These are the kind of patterns right here. So this is still bullish. I mean, this retrace kind of expected. I'm rolling into that, and I was kind of hesitant on expecting a big pop, mainly because of this trend line that was holding on Nasdaq and on S&P 500. I mean, Nasdaq, look at this. It's a deep retrace over here. Run that fib right up there, and we're getting a 786 on Nasdaq. That's deep. That's a deep retrace. Now, I'm not calling it off. I'm just saying that that's going to have trouble. A little bit of issue on this being super bullish here. Now, Russell bounced right off the roadmap line, right? I mean, man, go figure. This one not quite as, bearish here. We touched the 50%. Just touched it. Getting a nice little bounce up there. So far, so good, It can break back out above the roadmap line. That's going to be kind of a leading indicator. I was hoping to get up to the 1900s before we did this pullback. Didn't quite make it. We kind of stalled out 1, 2, 3, 4 days up there before the events of yesterday took us down in a blaze of glory. But we're not making lower lows here. We're making higher lows. This is very positive. And look right here. Holding that trend line. The low here, and the low here today. Holding the trend line. That's positive. Now we start breaking down below that trend line. Not so positive anymore. So this one can be the warning. Why do I watch Russell all the time? I keep harping on it, This can be a market indicator, like a canary that tells us, like kind of whispers in the ear what's coming up next. So right now, still maintaining a bit of bullishness, especially if we hold the 50%. That's quite bullish. Hold the 618. That's one of my favorite patterns right there, is to make a move up, come back, do a 618 retrace, bounce there, and then move higher. That's what I call the measured bounce setup. If you've taken the fib class I do, that's one of the patterns I teach in there with all the rules and caveats, but it's one of my favorite market patterns. You know why it is? Well, it's a very classic, typical A-B setup or a 1-2 setup. I was talking about Elliott Wave yesterday. If you haven't watched that, go back, watch yesterday's video. I gave the 30, 45 second version of Elliott Wave. Well, a 1-2 pattern or an A-B pattern, very similar in the market, but they all result in a strong next move, either a C if it's corrective or a wave 3 if it's impulsive. And it doesn't really matter the difference. Both those moves are strong moves, a C or a 3. They're both impulsive type moves. A C is impulsive and a wave 3 is impulsive, and they can make you money very quickly. That's one reason why I'm always looking for these 618 type retraces in the market, because they can be very reliable for that next move. Now, it doesn't mean you get a continuation and goes on a big run forever, but if you find them, you can make your money and move on. I mean, that's been my whole theme in trading. Just make your little piece, move on. Don't keep trying to get after the same thing over and over necessarily. All right. Little update. A few weeks ago, I made a big bold prediction on wheat, and kind of having a nice little rally here today. I'd really like to see it break out much higher and get it back, get up here around 10, 11, 12, maybe even up to my target, 12, 13, 14, 15 potentially. But so far, very nice right there. Holding that very relatively shallow retrace. Getting back above the roadmap line is going to be nice and bullish. All right. Big news from yesterday. United States government came out announcing that an attack on Saudi Arabia was likely in the next 48 hours. And oil spiked up here and hit the 90 and then pulled back again today. I've been looking for 90 and we couldn't hold it yesterday. Couldn't get above it. So still waiting for this. Right now I'm going to have to inch my target or inch my alerts up to just over 90, about 90.30 or so. Let's go 90.39, just above that candle wick right there. Candle top, whatever you want to call it. I got to be above that. That's my new indicator right there. We see oil moving up through there. That's going to be the indicator. Yesterday, not able to break 90 was kind of like a red flag. And of course, we're seeing this pullback today to almost $3. So stuff's not magic. It just happens over and over. All right. Gasoline prices still just messing around down here. Natural gas prices still just consolidating right here. Gold prices. Oh, made a lower low today. I was warning about that. And I'm still expecting this push down to at least 1600, if not into the 1580 area. You can see that final rip down, kind of clear out the gold. Copper going sideways. This is kind of another economic indicator right here. When copper starts running a little bit, that's where we see the economy improving. Now we're up off the lows. We're kind of got a little mini uptrend cooking off the lows here. Not huge, but we start breaking above the roadmap line on the daily on copper. And it may be another one of those early indicators that the economy, we might see a little more expansion on the economy. Lumber, I was expecting to move down to this 360 area. And why? Well, because things got a little crazy up here, and we made a lower high, and then that projected it. Just the typical correction would take us down to 360. And we may get it if the Fed's going to keep on this increasing rate rises. Well, that's going to put the screws to the housing market. And putting the screws to the housing market, they're like one of the biggest users of lumber out there. So demand drying up for lumber can crush this down to lows we haven't seen in a lot of years. A lot of years being at least 2020, and that's a very typical level for back here. And if we crush down through that, we could see a 1272 extension down to 250 per whatever it is, 100 board feet or 1,000 board feet, random lengths. Anyway, if we could see that punch down, it's going to be a huge reversal sign that we probably bottomed in that housing market and the lumber market. I'm just kind of running through bigger picture stuff here today that ties in with that Fed rate. Now, click save here, and let's pop over and look at my interest rate chart. Load the layout. Interest rates. So what do we have here? Climbing rates. Even with Jerome Powell raising rates 3/4 point, that puts us in the target for the next month or so. We're right up in here. We're still not even catching the market rate. This is the rate they're trying to catch. They're trying to catch that market rate. All right. If you had no idea Fed was chasing the market rate, the Fed's chasing the market rate. It's right there. Eventually, they catch it, and it usually leads to a financial crisis at the point where they catch it and it flips back the other way. And then they got to lower rates, got to lower. Now, I'm kind of the opinion that maybe they should slow down and kind of take it easy on trying to chase the market rate, but they've got it dead set in their minds. They're chasing this market rate. Yeah. How far is that away time-wise? Well, once they catch the market rate, it probably floats sideways for 3 to 4 months before the financial crisis really, the shiz hits the fan, so to speak, and we start seeing these rate cuts and bad crap happens. So we're a ways out from even catching it, and then we've probably got somewhere in the neighborhood of 100 to 120 days, 3 to 4 months once we catch that rate before everything rolls over. And watching the blue rate, the DGS2, 2-year treasury, watching that thing, if it starts rolling over, and not just a little spike right here, I mean like rolling over, like we see over here, like we saw back here, And notice 2000, .com bust, 2007-8, housing bust, 2018, that was the last time we were raising rates and freaked out, right? That Christmas there, right around December 18 and then 19, January 19, that was when we saw a big, nice market freak out, pullback. And then now we've got this current thing going on. In 2020, we were still on this financial correction thing, and we bottomed out. So right now we've got this next leg of this. What's it going to be? What financial crisis is this going to be next? I don't know. Anyway, that's kind of my outlook for the day. Look at this, Bitcoin not really participating in this. Well, let's go back. Save that interest rate, flip back to my other chart. Crypto not participating in this pullback here. Pull back up here. Crypto turning bullish today, or green at least. Not participating in the big pull down. We're only 19 points away from taking the S&P green too. So could end up being a big green day. Like I said, everybody getting bearish is the perfect reason we could go higher. All right, I'm going to wrap it up here. I've got a Echo Trades class coming up at 11. If you're interested in knowing more about that, you can check the link in the description. And I'm going to get out of here. Hope you have a great day. This is kind of wrapping up 7 days of doing these daily live streams, so we'll see. I may throw in a couple more, wrap up the rest of the week with these. But I want everybody to have a great day. Stay safe. If you're in Discord, check it out. If you want to get in Discord, just buy something from me. Like I said, link in the description. You can go to jeffreytrader.com and sign up for stuff. And I've got a hot new